Good morning, everyone. Welcome to our Thursday morning trading session. The market just opened, and we've got a rather substantial opening gap here this morning. Take a look here at the Eagle, and you can see the market remained relatively stagnant during the North American session, but it really took off during the Asian session and into the European session before drifting sideways again. So we've got a really big gap below the market again. We've had a few gaps over the last few weeks, none of which have really filled yet. So we'll see what traders decide to do with this one. You can see we got a little bit of a jumbled mess, no real signals to speak of. Here's the hawk, and you can see we got a lot of yellow bars printing. The filter, the bar colors, the trend lines, everything keeps alternating. So we'll put that on the shelf there for the moment. All right, well, we've got a couple of signals now. We are working a possible first micro-macro cross lower. We did complete a trend change signal here on the Falcon, and we are into the hard edge on the Eagle. So right now, the Hawk and the Falcon both looking a little bit more bearish. The Eagle and the Raptor still kind of holding their own. Let's see how prices react here to this hard edge. Okay, so we're going to get a first micro macro cross signal here to print. I might give this one a go. Let's see what it's going to cost me to be wrong. Ooh, I don't know if I want to go in that heavy just yet. I'll try a single. It's going to be enough to risk, I think. All right, let's see what the sellers got here now. If there's going to be a little push lower, try to get into that gap. Obviously, the market very strong to the upside. Ooh, hooray for us. That was a quick little hit and run style trade, my favorite. Okay, let's put that back on the shelf. John's asking when the quantity is entered manually, do you use lose the ability to trail No, not at all, John. The Whether I'm trailing a contract or going all in, all out, that's determined here by how you set your profit objectives. So I set my profit target at 10 ticks, and my trade was 100% all in, all out. If I wanted to trail, then I would, if I'm only trading a single contract, then I would need to change that value to a 0. And then everything would default to the runner position. Given this kind of sideways nature of the market, I wasn't really confident that there would be much follow through on the trade, which is why I chose to just take my profit when I had it. We are seeing a little bit more follow through at the moment here on the Raptor. I'm going to anticipate a cloud crossover signal because my clouds are starting to cross. Don't have a complete crossover just yet. The overnight rally, of course, if you were wondering what sparked the market overnight, that would have been the FOMC minutes released. So obviously it was good news, and right now there's no reason to get too aggressive on the shorts, as it does seem as though the NASDAQ is going to keep pressing the upside. All right, so we're into the hard edge now here on the Eagle and the Raptor, and as you know, whenever we hit the hard edge, we always anticipate some sort of reaction, so that's what I'm watching for now as well. The Eagle almost ready to produce the first signal of the day. That would be the first in sync signal. Looks like we might get a buying opportunity here on the Eagle. Now, a lot of times I end up missing this trade, but today, and again, because the settings are going to be a little bit tight, I think I'm just going to go to manual mode. Now, I can anticipate that the market's going to print right there. I can't cover it down there, so I'm going to cover it a little bit below, a little bit extra below those swings. Why? Well, I've got this test of the extreme to deal with as well, don't I? The market is bullish, yes, but we've had a failure pre-market, which is hinting maybe the market's going to try to head lower. For you Raptor traders, you do have a comparable signal here. It's not as clear cut, and it hasn't printed yet, but what you would be looking for is a hard edge bounce signal. Remember, whenever the market encounters the hard edge of the trading band, we're going to be looking for a reaction. David's asking, any reason, short of keeping your charts clean for education purpose, that you would not be running the ultimate support and resistance indicators on your charts? Nope, that's the only reason, David. It's for your benefit that I try to keep my charts uncluttered. Otherwise, no, I would definitely have the support and resistance suite on here, but of course I can always just reference my Falcon because these numbers will not change. The ultimate support and resistance suite numbers will be the same regardless of the indicator. Great question here from Peter. Peter asked, good morning, Eric. Well, good morning, Peter. Do you use a time element to your trading? For example, a trade is placed. Do you give it a time frame to make the move? Now, I know where you're coming from because Ray Burke used to be that way. And he was actually the fellow who was behind the Omni Timer, for those of you using the Omni Timer. Ray liked to see immediate momentum. He liked to see the trade filled. He liked to see some immediate momentum there. That would give him some confidence in the trade. It does not bother me if a trade takes longer to unfold. It does not bother me if a trade takes a long time even to fill. I suppose because I've always had a more technical slant. So that's always been my focus. But I do know traders, like I said, like Ray, who want to see the market respond quickly. So there's nothing wrong with it. But no, personally, I don't have much of a time element. I will watch the bar, however. If the bar seems to be struggling, I'll make adjustments to my trade. But it doesn't matter whether it takes 50 seconds or 5 minutes for the bar to complete. I hope that makes sense. Now, I'm like everybody else. I like to see immediate momentum on the trade. It's sure easier to trade a market, when the bars are unfolding like this than when the bars take their sweet time to do anything. Yeah, Tony, you're right. Tony said Ray had an emotional slant. He didn't make no secret of his emotions, that's for sure. Yes, David makes a good observation here as well regarding the times that it takes to fill. David writes regarding trades and fills and timing. Each of these markets have their own general rhythm character, and yes, they do. I People ask me, how many markets should I trade, and I usually suggest that you start with one and get to learn that market, even though the signals themselves don't change. As David pointed out, they do have a rhythm all their own, and you're going to find certain signals more reliable in some markets versus others. All right, I would very much like to see one more bullish bar here before I start rolling my stops. Peter asks, thanks, Eric. I hope to go through the indicators that came with the package. Do you like any of the add-ons? I like the volume candles. I like all the add-ons, actually, Peter. I'm not sure which ones Adam bundled for you, but they're all useful. The volume candles, the dynamic equivolume candles, are very helpful. It's always good to know what the volume is on a bar or group of bars, how much resistance we might anticipate as we get up into this price region. If there's going to be a lot of active buying or selling there. The trade forecaster, also a very helpful tool. You can see right now we are in swing mode. Trend mode coming up in about 10 minutes time, which is encouraging because trend mode usually means we see a little bit more follow through and a little less chop, which is always a fun way to trade. Then we have also the Geiger counter, of course, showing us the order flow. There's that little blip of buying that went through that sparked our little bit of a rally here. The day ranger, which helps us keep track of our daily ranges relative to the average. And then, of course, the ultimate support and resistance suite. And that is by far one of our best and best received indicators. Everybody loves the ultimate support and resistance lines, and I'm quite proud of those. David's asking if a trader was inclined and it doesn't kill his marriage, are there any particulars you'd like to highlight or warn about trading the overnight markets? The overnight markets are a lot more liquid than they used to be. Even just 10 years ago, you would not touch the overnight markets with a 10-foot pole. The only reason you would get into an overnight trade is if you were anticipating a big move in the morning and you wanted to make sure you got in early. But other than that, the overnight markets were a killer. Okay, now Peter, you were asking, and I've got a little bit more to say about that, but see how we're reacting now? It's not that this bar is taking long to fill, but rather the reaction that's causing me concern. So I'm going to force this trade to break even rather than wait for it to hit the break even trigger. Right, so I'm reacting not because this bar is taking a long time to go higher or lower, but rather because it seems to me like it's reacting here. And I bet you if I shot a trend line across here, it would look like that. See, we're getting a little bit of selling off of that trend line, and I just don't feel like leaving the risk open. Now, bear in mind, there's at least a scalper's profit here, so never be shy about grabbing the profit if you think there's going to be a bigger reversal, but I'm still holding out for another push here. The overnight markets, like I said, they are a lot more liquid than they used to be, and that's pretty much across the board. Crude oil sees some very good overnight moves now, and that is something that, again, is very recent. Even a few years ago, I wouldn't have looked at crude oil in an overnight. Now, I tend to try to trade the markets that are native to their time zone. So, for instance, I used to, before I did the trading room first thing in the morning, there were a lot of times I would be up at midnight Pacific time. Well, that's when the London market opens. So before I turned in for the evening, I would check my charts, and if there was a promising looking trade, maybe in the euro or even in the stock market or the DAX, well, I didn't do the DAX that often, but certainly the euro, I would place a trade and I would set my stop parameters. I would make sure everything was automated, and I would go to bed. And more often than not, I woke up to a pleasant surprise and had a little profit on an overnight move. I also know another fellow who made a career of working night shifts, so he lives down in Arizona, but he's always trading the overnight markets. But primarily the markets that are native to the overnight time zone. So again, he'll be looking at the euro, the yen, the British pound, gold. Gold's a great 24-hour market, by the way. If your lifestyle does not allow you to trade the North American stock markets during the North American session, then you either need to move or you need to start trading at different times. And gold is a great market. You know, if you find yourself coming home from work at the end of the day and you want to dabble a little bit in the evening, check out gold. Yeah, Tony says he likes crude, copper, the 6E, that's the euro, and gold for overnight markets. Pre-market is also usually pretty good. What a lot of people don't realize is very often there's a pre-market report about an hour before the stock market actually opens. So if you're in a time zone, say on the East Coast, where it's not a big deal to monitor the market an hour before the open, sometimes you can catch some nice moves through there as well. Darn it. The best stop is going to be down here, folks. I just don't feel like riding this out. I'm going to get tagged here in a second, I think, unless the buyers... step up. Oh, way to go. Tony says he grabbed 20 ticks out of the Eagle trade before that little hiccup. Good for you. There's nothing wrong with doing that, by the way. David is asking about the lines that are running through my Eagle filter down here. This great, cute little lines that move up and down and stuff. That's what programmers call decoration. It's just eye candy, David. I'm not even sure the new Eagle filter has that on there. You know, the programmers, here's a little inside baseball for you. The programmers struggled to differentiate the charts and keep them interesting. So that's why the Hawk filter's got little hash marks, the Eagle filter's got dots, or pardon me, the Falcon filter has dots, and the Eagle filter has got that line running through it. Yeah, there was, when we were developing these tools, there was a lot of times Ben would be asking, how can I make that look different? Same thing with the bar, the way the bars print. You'll notice the Eagle has the hollow body bars, and that's part of the signal generation. So that was a default for the Eagle, but you'll notice that the Hawk and the Falcon both print solid body bars. The Hawk, of course, the timing of the bars is different because the signal parameters are different in the Hawk versus the Falcon. All right, one more push. Bill's asking, have you removed the equivolume bars from the Eagle? No, I have not. The volume has been pretty steady through here right now, but you can, if you look back here, you can see I have a little fat bar. This would have been around the FOMC release. When the minutes came out. John's asking, is it reacting to the previous swing high as well? Yes, it is. It's no mystery where the buyers and sellers are. You know, traders are, a lot of times they're scratching their heads wondering, oh, where are the buyers? Where are the sellers? They make it very plain, and perhaps it's more plain with the mean Renko bars, which is one reason I like them. If you were looking at, say, a 5-minute chart, it may not be quite as obvious, but there is obvious buying support down here around 57.40. There is obvious selling going on at around 57.55 as well as 57.60. Now, as a rule of thumb, if the market is in an uptrend, it will honor support and it will break resistance. Right? Otherwise, it can no longer be in an uptrend, which is why we pay particular attention when we have a test to the extreme and a failure, because that shows us the market is no longer honoring the support or breaking the resistance. It's starting to flip-flop. So because the market is in an uptrend, I gave preference to the buyers and got a little lucky through this swing right here. Let's see if I can get lucky one more time as we get up to the overnight highs, if we can see the market press through there. David's asking, can you tell me a little bit more about the Eagle filter down here? Okay, the filters are all essentially momentum-based filters. Their settings are a little bit different, but really that's what we're looking for. They're looking to capture market momentum. So here with the Eagle, for instance, all right, sure, this will do. So we've got a green block through here, which suggests the market is bullish, and all of a sudden we see this rather substantial red block show up, which starts to give me a little bit of pause. The buyers come back, the sellers spell them off. The blocks are about equal in size. The buyers come back a little stronger, right, relative to this one here. The sellers come back a little stronger. The buyers come back a little stronger still. Here, let me wind this back one more tick. The buyers come back a little stronger still. So it looks like buying momentum is trying to build, and yet the sellers came back stronger still. So at around this point here, it's starting to look like the sellers are going to take control of the market, because now all of a sudden we've had a little bit more of a selling bias in the market. You're going to see that happen a lot as the trend starts to change over. Your filter is going to start to break up, and you're going to see more momentum build on the opposite side. That suggests that the trend might be changing. As a rule of thumb, we do try to stay with the filter as much as possible. The exception will be the hard edge bounce signals, where sometimes they will print off of, in this case, a red bar buy might print off of a red filter. In this instance, it did not, which is nice. Printed off of green filters, giving us a little bit more momentum, but it would not spoil the signal to see a red filter down there. Peter dabbling in the DAX. He says there was some great action in the DAX earlier today. Expensive to trade, but great results using onesies. Yes, it is. It's almost like trading the bond market. You know, you don't have to hold in all that long to realize a decent profit. Yeah, the DAX, a good little market. And then, of course, if you're in North America trading the DAX, you get the benefit of the higher exchange as well, picking up a few points on the euro. For those of you who don't want to dabble in the DAX, a very good day trading market is the French stock exchange, which is the CAC 40. I don't get it any longer in my data feed, or I would show it to you, but it's a fun little market to follow. The Stocks 50, that's, what's the symbol? FESX, is the European Dow Jones. You're going to have to at least go with the alternate settings on the Stocks 50. Last time I looked at it, the regular settings, the default settings, were a little bit too high for it. All right, so we're getting near my profit objective. We're getting near the overnight highs. I don't feel like giving up. You know, I've got, what, 150 in open profit here. I don't feel like giving that up. So I'm going to move now to my bar high-low strategy, and I'm going to squeeze this trade. There we go. That's all you get. You got one bar to sort this out. And here we'll push it over the edge. Oh, whew. Good. Just gave it that little extra nudge to get up there. So we had good comparable signals here. We had a very nice first micro-macro cross in the Hawk, a good trend change signal here on the Falcon, which coincides with the #1 signal here on the Raptor. So we're still working that one. But as I said, when you hit the hard edge, you should anticipate a reaction. So even though it did not print as a #3 signal, and the reason it did not print was this first cloud was underneath the hard edge, but you could have anticipated that as a #3 signal. Now, if you want these signals to print, I do believe if we go to our Raptor, here the signal parameters on the hard edge, trend confirmation, if we turn that, oh no, sorry, that's already turned off. Yeah, okay, sorry. This was just purely a visual one, but it didn't matter. Even if you passed on that, it looks like we've found our profit objective already here off the #1 signal as well. So shooting fish in a barrel today. I'm not I better not say stuff like that. The market will turn around and spank me just for being a wise guy. Okay, David's got a question here about the Eagle bars. David asks, still trying to get my head switched over from years of reading price candles into the Renko bar mentality. So the red Renko bar printing is bullish on a rising price, and still red, not green, because, why? Because, okay. First, let's look at the bar construction here on the Eagle. The hollow body bars are bullish. They have the open price at the bottom and the close price at the top. The solid body bars are bearish. They have the close at the bottom and the open, in this case at the middle, or the open at the top. So in that sense, they're like regular candlesticks. The Eagle also paints the bars red or green based on how the programming is interpreting the market conditions. So right now, the market is very bullish. The bars are printing all green. When the market condition starts to change, the bars will start to turn red. But as you can see, you can have down bars that are still bullish in nature, and you can have up bars that are still red in nature. Now, speaking of the early programming and whatnot that we were doing with these tools, I'll mention that even though I don't think we ever went with this, the original premise for the Eagle was green bars, green filter, bullish band, green signal. We would not even entertain a bar that was red. We would not entertain a buy signal on a red bar. But then as we got using it, because the tools had like 9 months of testing, as we started to use it, we kept trying to program this out. We kept trying to get these bars to remain green, but they wouldn't. So rather than, scrap what was a good signal generation, we just lived with it. What it's telling you is actually very interesting. It's telling you, okay, the market is very, very bullish. Okay, the market's bullish, the market's bullish, the market's bullish. Oh, wait a minute. All of a sudden, the market is starting to turn bearish, and it's almost like it's a wake-up call for the buyers. It's almost like the buyers have been asleep at the wheel, and somebody just gave them a poke in the ribs and said, hey, if you guys are serious about rallying the market, you had better get your act together, because here come the sellers. They're sneaking up on you. That is why we get a red bar with a buy signal. It is also a very reliable signal. It will only occur as the market gets close to the hard edge. You will never see a red bar buy signal print up here. There's just too much momentum. But that is what it's showing you. It's showing you a very intense struggle between the buyers and the sellers. The sellers have the short-term momentum, at least enough to flip the bar colors. The buyers, however, have enough left to generate a buy signal. So it's showing you an area of intense conflict. And if the buyers can pull it out, they will produce a buy signal off of red bars, and the follow-through is usually very good. I don't know if I'm going to be able to show you a green bar sell. The market has been in rally mode for so long now, but the green bar sell is the opposite. Sorry if I'm making you dizzy. All right, well, this had no follow-through, but it's the same idea, but in reverse. So we've got a market that's trying to be in a downtrend. It pulls up, and notice the bars are red, suggesting the immediate momentum is still to the short side, even though these bars are climbing. And all of a sudden, they get green, and it's like now the sellers, it's do or die for the sellers, which it is, and they produce a green bar with a sell signal. This is the opposite of the red bar buy. Now, this also tends to be a high probability signal. However, in this case, the context is not as good as our buy signal was this morning. And can you see why? If I roll over here, can you see why the context is not as good? We have just had a monster rally. A huge, huge rally, tons of buying pressure. And now we get, a little bit of a reverse. This reverse by comparison might be like this. Do we really think after that monster rally that, the buyers are not going to try to push back at least once more? And which is, of course, what they ended up doing, which is why that green bar sell did not have as much follow-through. Is it still a valid signal? Yes, of course it is. You'd have to cover it fairly deep if you were really interested in this. And given the overall context of the market, I'm not sure I would have tried to hold on for the full amount here. Maybe, take profit, oops, wrong button, maybe take profit a little bit early if they give it to me. There they do. See, that's what happened. They got a swing out of it, and then all of a sudden the buyers started to rally it again. I would probably be more aggressive with my stop as well once I saw that happen. Again, because this is a counter trend trade into a very, very strong uptrend. I should not be overly aggressive. All right, and there's another flip, so I might choose to bring my trade now to break even. And there I'm stopped out, and if I didn't take it to break even, I would have one more chance to roll off of that candle right there, and then I get stopped out for, I don't know, about $50 or so. So the signal is still tradable, but you need to look at the context of the chart. You want to look at the left side. Try to get a feel for the probability of the trade working out, and then you will manage your trade accordingly. So here this morning, here's our trade. Okay, I know we have the benefit of hindsight, but what would your gut say the probability is that the market will go higher? Probably pretty good, right? We've had this, forget the time that this occurred. We had a good, strong rally. There's a pretty good chance the market is going to try to go higher from here. If we are, in fact, in a, let's say we suspect we're looking at this and we say, oh, gee, Eric, I don't know, that looks like a little bit of a trading range. Okay, well, if it is a trading range, we know that when the market is in a trading range, the buyers tend to buy toward the bottom third, bottom quarter. Sellers tend to sell top third, top quarter, right? So we're getting a reaction off of the buying zone. So all these things are saying, yeah, all right, there might be a little bit of a buy-in here. This swing did give me pause, which is why I chose to run my stop a little deeper and why I only went in with a single contract rather than go in full risk percent mode. Oh, I would have only got one anyway. But I did not want to go in too heavy, and it was because of this swing right here. But just looking at this chart, we know on a gut level that there's at least a chance the market's going to go higher. So why would we not try to buy? And we saw a little bit of a reaction here. And I anticipated that, okay, maybe the market might fail at that point, so I brought my stops up. I got a little bit lucky that I did not get tagged on the reversal. And then the market went up and hit my profit target and actually went a little bit better. And that is trading in a nutshell. You're never going to have all the answers. You're always going to be trading in a vacuum. And you just make the best decision you can, but you make a decision. One thing that trading is not is trying to tweak your indicators or add so many indicators that you filter out every anomaly. That is a rabbit hole you will never emerge from. So don't even get into that mindset. Oh, good. Asman says, hooray, my chart's in sync with yours today. Yeah, it's funny, the data providers, or even where you are in the world, sometimes our charts will look ever so slightly different, but you shouldn't worry about that because of the signal generation, you still trade what's in front of you here. Okay, so Aspen asked, Eric, please explain, after 954 on the NASDAQ, there was a dot and did not print any signal, 1 or 3, on the minor pull. Later around 10:11, the Raptor 1 came, which I took and still riding. Please tell me why I did not give a Raptor 1 or 3 after the first dot. Thanks. Okay, so 9:54, you're in Edmonton. So this is 10:11, so 9:54 down here. I think this is the one you're looking at. All right, so Aspen's asking, why did we not get a signal print there? Because computer programming is very specific. Computer programming has no gray area. As those of you who have ever tried to program anything for a computer know, you have to define all the parameters, and the parameters are very rigid. Now, I know there's some very smart people working on fuzzy logic programs and artificial intelligence, but honestly, I'm not sure we'll see anything like that in our lifetime, or certainly in my lifetime, that is going to compete against the human brain. Now, there's no question that computers can decipher information much faster, but they can't interpret gray areas like this. And this is what this is. This is a hard edge bounce. This is a number 3 signal, but it falls outside of the signal parameters. And I'm suspecting it falls out of the signal parameters for 2 reasons. Number 1, this cloud, and number 2, the bars drifted probably too far from the hard edge. Actually, that was probably what did it in. The bars drifted too far from the hard edge. Therefore, when this signal printed, it did not interpret it as a number 3 signal. Oh, Aspen's asking, no, the dot after that. So he's looking at this one right here. Well, quite simply, it did not have enough of the trading algorithm parameters met to print a triangle and hash mark. Remember, your warning dot is just that. It is a warning dot that signal parameters are starting to be met. You may want to pay attention. Signal parameters are not fully met until we get a triangle and a hash mark. So very often you will see, sometimes 2, sometimes 3 warning dots print, but no signal. So we had 2 warning dots print right here, but no signal. That's because part of the cell parameters were being met, but not enough to actually produce a signal. So just because you get a warning dot does not automatically mean that you're going to produce a triangle and a hash mark. We're getting a warning dot right here. There is no guarantee that we will produce a triangle and a hash mark. The warning dot, as I said, is just that. It is only a warning. See, here's a couple of warning dots that printed on the buy side, but no signal. The signal did not originate until here, and this is when all the trade parameters were met. Aspen asked what was needed. I have no idea. Only Adam and the programmers are privy to all the algorithms working behind the scenes here. So you can talk nicely to Adam, but I don't think he's going to tell you. All right, so a nice little bull run up. We've got a bullish market today. Bill ask, in some signals there are triangles covered by the dots. Yes, that is true. And again, that's just the way the signal unfolds. You see right here, there is a triangle and no warning dot. What happened there? Well, there was a warning dot, and then the warning dot became absorbed, and then the triangle printed because all the signal parameters were met. Here's a warning dot and a triangle. So first we had the warning dot, and then the signal parameters were met, and we printed a triangle. You should not get too hung up on these kinds of things, though, folks. What you want to pay attention to is you want to pay attention to the signal. You want to pay attention to what price is doing. Because as cool as all these tools are, the only thing that is truly on your chart is the price. There is no support and resistance lines. There is no cloud. There is no filter. These are tools that we use, much like a carpenter uses tools to build a house. These are our tools, but the raw building materials are the price. These tools help us interpret what's going on. So we've got a hard edge bounce, we've got a cloud crossover, we've got our pullback, we've got our signal. These are things that tell us, yeah, okay, here's a cloud crossover signal. Let's go for it. And, just like this hard edge bounce here, this hard edge bounce was not invalidated, but it did require, or even this cloud crossover, it did require you to trade it. You can't trade it like that. I hope by now you realize that if you set up your trades this way, you're going to get stopped more often than not. Now, if that suits your personality, then by all means continue to trade that way. I know a good trading friend of mine, Tom Loge, trades the bond markets, but Tom will get stopped 5 or 6 times a day before he hits a winning trade. Each stop out, though, may cost him, he routinely only risks a couple of ticks, so each stop out costs him $60 and change. But he'll get, like I said, he'll get stopped out 5 or 6 times in a day. So my conversation with Tom always goes with something like this: Tom, why would you not run a $300 stop? If you're going to get stopped out to the tune of $360 or $300 or $360, why would you not run a $300 stop? Right, because it's not a loss until it gets hit. Not only that, you got commissions, you got fees, so really his $60 is going to be more like $80. But that's not what suits his personality. For him, he's got to trade this way. He's got to keep his stops tight. That's what he is comfortable with. And, at the end of the day, like I said, it's your money. You got to go with what you think is right. So here's the number 3 signal that developed pre-market. So again, we would not place our stops right here. And I normally, as a rule of thumb, I go 2 swings back. So there's swing 1, here's swing 2. Give your trade a chance. And you can see we took some serious heat on this, but even by riding 2 swings back, we would have eventually found our profit objective. And then some. So, to my way of thinking, it just makes sense not to strangle your trade. Give yourself a chance to realize a profit. Aspen says, I'm like that. Keep losses small and winners run. Yes, but you have to be prepared to absorb more losses because that's the trade-off, right? If you have your stops tight, okay, and we're just waiting now. So if you have your stops tight, let's say you choose to go right there. Okay, so you get stopped out. That's stop out number one. So you're down $100. Here's signal number two. You try it again. Stopped out again. Now you're down $200. And let's say you took this signal here. Oh, you got your profit target. Okay, so now you're down 100. And now, of course, we know the rest unfolds. But a lot of times, by running the tighter stop, so long as you're prepared to take a more frequent stop out, it's okay. Now, to its credit, the DTS and the Raptor system are both excellent at picking up immediate market momentum. You'll see that more often than not. You print a signal and it goes. You print a signal and it goes. Occasionally, however, you will print a signal and you're going to take a little bit of heat before the market goes. Oh, yes, okay. Aspen's doing the Top Step combine. He says, unfortunately, Top Step has got tight stop parameters. I use the bar high-low. Yes, you are absolutely correct. If you are competing in the Top Step combine, you have no choice but to keep your stops ultra tight. But the good news, like I said, the DTS system usually very good at picking up on the immediate market momentum. Aspen says, what I do now is when the hash mark shows, I keep the order ready, but I haven't hit the submit button. And as soon as the 1, 2, or 3 signal displays, Aspen says I'll hit the submit button. So he sets up his order like so, and then once he sees the number 1, he just clicks submit and grabs that trade. He said, so far it's working pretty good. It catches about 80%, unless the market moves really fast. This is an important comment as well. Aspen says, trading with tighter stops suits my style, my emotional style and character. And as I mentioned before, if there's one thing about trading, you're going to learn a lot about yourself, good and bad. And, you know, I've mentioned before, you're going to learn how fearful you are, how greedy you are. And I'm not using those words in their normal negative connotation, but rather it is true. You need to know what kind of trader you are. Are you the kind of trader who, you know, like here on my Eagle trade. So I'm in here. Oops. There we go. So I got $200 in profit. I'm out another $200. I could have had $400 had I held in a little bit longer. If I'm the kind of trader who gets all bent out of shape right now because I missed out on an additional $200 in profit, then I need to let the market run. I need to be prepared to walk away from that $200 when I have it in anticipation of trying to get more. If I'm the kind of trader who looks at a trade like this and I'm up, $100, and then the market turns and takes that away from me, and I get tagged at break even or maybe even a loss, and I'm bent out of shape that I let that money get away from me, well, then I need to be more aggressive with my stops, or I need to take a tighter profit target. And as I've mentioned before, it's not the frequency of the trading that's going to earn you the money. It's going to be your capitalization. If you're able to capitalize on a trade like this efficiently, see, if I ran it tighter like that, I could have gone in with 2 contracts and I could have doubled my earnings. Not double the number of times I get into the trade, but double my earnings. If you haven't noticed already, there are better times to get into a trade. And usually the first signal is going to be your better signal. Yeah, Tony's chiming in, and he says, I could care less if the market makes a greater profit after I'm out. I get happy, a profit in the bank. And see, that's the way Tony's wired. There's no right or wrong. I know people who, cannot stand to let the market move this much further without them. I know people who will say, well, I'll just keep buying in. And that's fine too. Oh, darn it, I meant to show how I would add to a position. I need to make myself a note. I'll show you tomorrow. But that's what I mean about trading being such a personal business. You have to know yourself. For the benefit of those who haven't heard this story yet, I'll just share a quick little story with you. I was visiting a friend of a friend of a friend the other day. I just happened to be along, and I guess the other day, this is a few months back now. And this person was doing a major reno on a beautiful house right on the ocean. And I noticed they had a bunch of computer screens, and it looked like they were traders. And I asked him what he did for a living, and he said that he's a day trader. So of course you start sharing day trading stories. Well, one thing led to another, and I asked him how he generated his signals. And I thought he was putting me on, but he says he looks at the chart and he sees how the chart makes him feel. So if he feels the market will go up, he buys it. If he feels it should go down, he sells it. Oh, okay. This fellow was doing a monster renovation. There was a Cadillac parked in the driveway, and a nice little boat there as well. So he was obviously doing pretty well. So I inquired a little bit more, and what he told me was essentially this, that he actually trades money for other people as well. He trades stocks, so the legislation is all different, but at any rate, he always asks his prospective clients this question. If we have $50 in profit, do you want me to take the $50, or if there's a potential that will make $200, do you want me to hold out for the $200? And inevitably, almost everybody will say, hold out for the $200. And he says, no, that's the wrong answer. The right answer is we take the $50 profit when we have it. And in that respect, he and I were of the same mindset, that I tend to be somebody who is more satisfied when I have my profit. I try to play the odds, and I know that the odds, the market's going to make a monster move, well, that occurs about once every 2 or 3 months. So for me, I tend to focus on the bread and butter trades. I'm more of a bird in the hand kind of person. That's me. That doesn't mean that is how you are wired. You may try to put a runner on every single trade, in which case you are probably doing much better this morning than I am. that's you. You know, you gotta work with what you got, really. You are who you are. But as I said, you'll learn a lot about yourself when you're trading. All right, so we had that nice little number one signal. We had a great trend change signal in the Falcon, of course, our Eagle signal, and a few nice Hawk signals as well, although the first micro macro cross would have been the one. Yeah, Bill writes, I found out some not so nice things. Well, and that's it too. You know, I remember learning some very painful lessons about myself trading, but once you come to realize that, you know, hey, I'm too quick with my stops, or I panic as soon as the market starts to flinch at me a little bit, you make allowances for that. I try not to be too quick with my stops unless I'm fully prepared to take a break even. Bill says I should ask Adam about some of those not so nice things. Yeah, next time I'm talking to him. All right. We have been in a full-on bull market all morning, so it's not unusual to anticipate a little bit of a retrace. I would not get crazy on the short side, but we might see a little bit of profit taking. Bill asks, if I'm trying to trade while working, would you feel that the Raptor is a better way to go than DTS? I've been using DTS more often. More often recently, and it seems just to frustrate me. Well, trading while you're trying to do something else is always going to be a difficult task. The Raptor, I suppose, with the additional prompts, would be very helpful. Because it is going to highlight the higher probability signals for you. It is It is tough to trade, though, just to show up, glance at a chart, make a decision, and then come back 5 minutes later. I hope you're not a doctor, Bill. I'd hate to be your next patient if you just took a hit on a trade. The DTS birds, you know, the signals are very good, of course, but yeah, you do kind of need to watch them unfold. If you've only got a little bit of time to take trades, then I would suggest you try to capitalize on the first eagle signal. So what we're looking at is not the first signal of the day. This was the first signal of the day. Rather, the first in sync signal. So in this case, we have a bullish band, so we're going to look for our first buy signal. And that occurred right here. That was the signal I took. This signal has a tendency to have a very good probability of success. Here was yesterday's first in sync signal. Now note, you cannot run your stops overly tight. Here's a perfect example of how the market gives you a little bit of heat before it finally takes off and finds its profit objective. The first in-sync signal also has the added benefit of usually developing within, say, the first 15 minutes of trading. Although on this day, you can see we never even got one. We never got an in-sync signal all day, except about 10 minutes before the close, and I certainly would not take a trade that close to the close. Here is the day before that. Here's our first in-sync signal. Now this one actually took about 45 minutes to an hour to develop, but again, very solid trade. So if you're, you know, really pressed for time, maybe that's the trade you want to focus on. Short of that, though, yeah, the Raptor prompts will definitely help. If you can spare an hour in the morning, so from market open to an hour later, that's when you're going to get the vast majority of your signals, of your quality signals anyhow. Bill asked, do you ever use time as an indicator to get out of a trade that has not reached target? My thought is that after 30 minutes, the market is not the same. That set the signals. Yeah, it's funny you should mention that because we were just talking about that a little bit earlier. As a rule, no. No, for me, it doesn't matter how long the signal takes to print, but I do get your logic. Sometimes the market is just waiting on something, you know, a little tidbit of news or I don't know. But no, as a rule, I trade what's in front of me. I trade the chart. So if I see a cloud crossover signal, clouds cross, they come back, price comes back into the cloud, it comes out, I get the prompt, that's a cloud crossover signal. It's a high probability signal, I will trade it. So once the signal prints, it's no longer a question of should I, but rather how can I? Can I afford to trade this trade properly? What is it going to cost me to be wrong? If I go 2 swings back, there's my stop. Am I okay with that? If I can't afford that trade, can I cover to the hard edge at least? Oh, okay, well that's, you know, reasonable. $200 trade. All right, let's give it a go. I hit the submit button and away we go. Now, in actual fact, this took a little bit of time to get up here. If you look at the timestamp, This was hardly a fast trade. So it initiated at 7:11 my time. First few bars developed, but by the time we got up to our profit target, I guess it wasn't that bad. It seemed like it took a little longer than 5 minutes. But I have been in trades that will take 20 minutes to develop or get to their profit objective. That's just how it goes sometimes. So, no, for me personally, the time does not matter that much, but I do get where you're coming from. Aspen asks, I read that the market is in a sideways trend for nearly 70% of trading days and only trends the remaining 30%. Is that true? Yes, absolutely it is true, which is why like I said, I tend to focus on my bread and butter trades. Why, more often than not, I will be all in, all out, and if the market bolts without me, oh well. Now, it's always nice if you can afford a runner. A runner gives you options. So let's say I took this trade and I could afford 2 contracts. Well, then that's fantastic. I have my profit here. I have a runner in play. I can try to hold out for a little bit extra. But even so, a lot of times in my experience, I've noticed that even with a runner in, I would have done better just taking profit on both contracts at target. You've heard me mention this time and again. It's not how many trades you take. It's finding a quality signal, capitalizing correctly, taking your profit, and if you can net $100 a day out of the market, which you can see is either going to be 1 or maybe 2 trades, there is no limit to how much money you can earn. And even if you're just trading onesies, and you can do that every day, you can earn an additional $20,000 a year. And that would, of course, be $20,000 per contract. So if you're trading 5 contracts, well, then that's $100,000. And that's how traders do it. You know, we all have in our back of our minds this little image of traders going crazy, the high-frequency guys in and out, in and out. Remember that movie Trading Places with Eddie Murphy and Dan Aykroyd? And if you haven't watched it, you got to watch it. But it's they made all their money on one trade, or one occasion, and not just one trade, but one occasion. Oh, yeah, thanks, Bill. Bill asked, haven't been here for a long time. How's your back? Last time I was here, you were having significant pain. Yes, I certainly was. I had a herniated disc, and no idea how it happened. I twisted funny or lifted something or who knows what. And it went away just as quickly as it came on. But not before having to suffer through it for about a month. Had to go for all kinds of tests and whatnot, make sure it wasn't something more serious. Yeah, Bill says it's an age thing, no offense. Yeah, none taken, Bill. I know, I wake up every morning, there's a new creak or groan or something. But yes, that was that was bad. All right, gang. Kind of hitting the lunch hour slump. I know it's a little early for lunch, but I think we're going to the market's either going to continue to drift here, or they may try to pull back ever so slightly. Tomorrow, of course, the day before the Memorial Day long weekend, so I suspect traders will get busy early. Which might give us a brisk day out of the gate. Yeah, Tony writes, no, it's a bad back's a good excuse for a bad swing. Yeah, I'll have to remember that. All right, gang, I think we're going to button up shop here for the moment, and I will catch you all again tomorrow morning. We'll talk to you then. Bye for now.